Welcome back to the floor of the CMZ Group here in Chicago, Monday, February 27th. I'm Killer. Great to be here, folks. Let's get into the zone, the CMZ zone. So we continue to talk about oil. Oil. We've seen this absolute sensational rally, which is really damaging the economy. And when we speak about what is the actual translation here, every 1 cent gallon increase, price per gallon increase at the pump is equivalent to a $1.4 billion suck out of the economy. So think about it, folks. If the price of gas goes up $1, every QE that Ben Bernanke, QE1, 2, 2.5, whatever you want to call it, everything of the $1.4 billion quantitative easing is fully negated with a $1 increase at the pump. So there's a lot of tension here in Washington. There's geopolitical tension, which is driving this whole thing. Over in Iran, they're talking about a no-fly zone over in Syria. So we have grave concerns right now in the oil market, and that is kind of making the whole S&P, the equity market, rethink. Have we gone too far too quickly? I am in that camp. We've come off these October lows in a furious way. So as Armageddon has been tabled, no doubt about it, and kudos to Mario Draghi over at the ECB with his LTRO, which we are going to have a second tranche this week. Armageddon has been tabled. However, the S&P is currently up about 8-9% as of 2012. We're not going to see this continued rally. We are not going to be up, folks, 48% on the year. I'm sorry, hate to be the bearer of bad news. I do see this oil market. Technically, I've talked about this on Fast Money a few different times. Once we got over that 103.73, it is going to 110.82. It stopped just short of the killer insight on Friday at 109.95. We're going to see this technical target continue to get sought after. Markets gravitate towards these technical situations, folks, and as we see the geopolitical tension continue over in the Middle East, this is going to happen. Now, the main focus is as we see 110.82 in the oil get taken out, it's all about the May highs. The 114.83, I believe, was the high back in May. If that gets taken out, you're going to see companies and firms, specifically the airlines, have to come in and hedge. When you see that hedging, this could really escalate and move the crude oil market past 125. Brent is on its way. It's in the highest year valuation. So we're seeing the whole market kind of freeze, but at the same time we're looking at data this week, the ISM. But the main focus this week, clearly oil is in the foreground, but we have to look at the LTRO. And a lot of people are talking about more cash is great, but I think that underscores how banks in Europe are really hoarding their cash because they continue to put these deposits back to the ECB for that negative 75 yield that the Wolfman and I talked about here a lot on the CMZ. So this week is a key focus, and I'm looking to see actually some volatility come back in the market. The market seems a little complacent here. So I've been recommending, as of today, on my killer note I put out, buckle your chin strap. We're going to get ready to buckle your chin straps. I think volatility is going to be back in vogue. And you can play that. Dr. J and Pete laid out a lot. You can play in the S&P and that VIX. So VIX is a nice way to play it. But I think the protection trade is paramount, folks. We've had a great rally in the S&P. The Treasury market, which is my wheelhouse, continues to point to pain is coming. Right now, the 10-year is at 1.93. The 30-year is knocking on 144 even as we speak. We're seeing a nice little bit across the Treasury complex. A lot to talk about today. Sorry for the length there, but I want to hear your banter. Hop in here, folks. There's a lot of Twitter conversation going on about oil, and you can get me at the killer. One other thing from the floor of the CMZ Group, be the hammer, not the nail.